Hello and welcome. This guide is brought to you by the team here at My Tax Accountant. For almost 2 decades now, we've been helping UK investors just like you make sense of the tax world. And today, we are talking about something really special, something that could completely change how you invest in new British businesses.
So, picture this. You get an email from a friend. They've done it. They finally launched that amazing business idea they've been buzzing about for years, and they're looking for their first investors. You're thrilled for them. You totally believe in the idea, but then your brain hits a wall, the tax stuff. It all just feels complicated, a bit confusing. You know the feeling, right?
Okay, hold that thought. Now, what if I told you that you could make that exact same investment and HMRC would basically give you half of it back? Yep, a full 50% of what you put in returned to you as a direct reduction on your income tax bill. All of a sudden, that's a very different ballgame, isn't it?
Well, this amazing tool is called the Seed Enterprise Investment Scheme, or SEIS for short. And in this guide, we're going to break it all down for you. We'll look at what it is, who can actually use it, what you get in return, the step-by-step process for claiming your cash, and maybe most importantly, how to avoid the hidden traps that catch so many people out.
Right, let's get straight into it with our first section. We're going to unpack what SEIS is all about and why it's such a massive deal, especially for the 2025/26 tax year.
So what is it really? Well, at its heart, SEIS is the government's way of giving you a massive incentive to invest in small, high-potential UK startups. You see, these little companies are the lifeblood of our economy, but let's be honest, they're risky. So to get that crucial early-stage money flowing, the government basically says, we'll share that risk with you, sweetening the deal and making angel investing accessible to way more people.
Let me tell you a quick story to show you what I mean. We worked with a client, Sarah, a marketing director from Leeds. She just sold some old shares and was staring down the barrel of a £15,000 capital gains tax bill. Ouch. But instead of just paying it, she used a clever part of the scheme called SEIS Reinvestment Relief. Not only did that slash her immediate tax bill in half, but she also got the 50% income tax relief on her new investment into a fintech startup. And today, that startup's value has doubled. That's SEIS in action.
Okay, this next bit is so important. That's not all. Here's where most people go wrong. SEIS is fantastic, but it has a very strict rulebook. Getting this part right is absolutely critical. So let's look at who can actually use this scheme, both for you as the investor and for the company you're thinking of backing.
So, the rules apply to both sides of the deal. For you, the investor, you've got to be a UK taxpayer, you have to promise to hold the shares for at least 3 years, and you generally can't be an employee of the company. Now, the company itself has to be a small, young, UK-based business that isn't listed on a stock exchange. It needs to be a proper trading company, not just a shell for holding assets.
All right, let's do a quick mental checklist, shall we? Are you a UK tax resident? Yes? Good. Are you buying brand new ordinary shares, basically getting a piece of the ownership pie? Is the company a proper qualifying UK business? And can you commit to holding on to those shares for 3 years? If you're nodding along to these, then you are definitely in the game.
Right, let's talk numbers. These are the key limits you absolutely need to know for the 2025/26 tax year. As an investor, you can put in up to £200,000 per year. The company itself can't raise more than £250,000 in total through SEIS, and it has to have less than £350,000 in assets before you invest. Think of these numbers as your reality check before you get started.
Okay, so you've checked the rules and you're eligible. Let's move on to the really exciting part, the rewards. What do you actually get for supporting a new British business? This is the big payback, and it's brilliant. There are 3 main benefits.
The headline act, the main event, is that incredible 50% income tax relief. With the annual investment limit now at £200,000, that means you could potentially slash your income tax bill by a massive £100,000 in a single year. I mean, that is a seriously powerful saving. But it gets even better. Perk number 2 is what happens if things go really well. If that startup you backed absolutely flies and your shares become worth a lot of money, any profit you make is completely 100% free from capital gains tax. You just have to hold them for 3 years. All that growth is yours. It's an amazing tool for long-term wealth building.
But hang on, what if it all goes wrong? I mean, these are startups, they're risky, right? Well, that's where loss relief comes in. Think of it as your financial safety net. If the company unfortunately fails, you can take your net loss, that's your investment minus the tax relief you already got, and offset it against your income tax bill. This is huge. It completely cushions the blow and turns a potential gamble into a much more calculated risk.
So you've done it. You've made the investment, you know all the amazing benefits. Now, how do you actually get your hands on that tax relief? Let's walk through the exact process of turning your investment into actual tax savings.
Okay, pro tip for you, and this is a big one. Everything, and I mean everything, hinges on one document, the SEIS-3 certificate. This is your golden ticket. The company you invest in has to issue it to you. I remember a client, Raj, who was super on it, got his certificate right away, and had his tax code adjusted within weeks. His mate, who invested in the very same startup, waited months for his certificate, and it held up his whole claim. So don't be shy, give the company a friendly nudge.
You've basically got two ways to claim this. If you're a salaried employee, maybe you're in tech in London, you can just ask HMRC to change your tax code. That means you get the relief back bit by bit every single month in your paycheck. Or if you're self-employed, like a freelance designer up in Glasgow, you'll claim it on your self-assessment tax return and get a nice lump sum refund.
Now, I know self-assessment can sound a bit scary, but honestly, for this, it's pretty straightforward. Once you've got that golden ticket, your SEIS-3 form, you just go to the additional information pages on your tax return. You pop in the details from the certificate, and you hit submit before the deadline. It's really not like trying to read ancient hieroglyphs. It's just about following the steps.
Stay with me. This next point might surprise you. Did you know there's a brilliant little bonus here for parents? If you earn over £60,000, you start to lose your child benefit because of the high income charge. But your SEIS investment actually reduces your adjusted net income, which is what they use for that calculation. A smart investment could literally protect your child benefit, saving you even more money. It's a fantastic perk.
You're almost there, but please don't tune out now. This final section is absolutely vital. You see, getting the tax relief is one thing, but keeping it is another. Let's talk about the hidden traps and how you can make your tax relief totally bulletproof for the long haul.
This is what we call the clawback, and it's as scary as it sounds. If you sell your shares within that 3-year window, or if the company you invested in stops meeting the SEIS rules, HMRC can demand all of that tax relief back, sometimes with interest. We saw this happen with a client, Grace. The startup she backed got bought by a huge firm which broke the rules, and her relief got clawed back. It's a very real risk you need to be aware of.
So how do you stop that from happening? Well, think of this checklist as your shield. Keep an eye on the company. Don't sell early, no matter how tempting. Keep every single piece of paper related to the investment, your SEIS-3 bank statements, emails. And if you think something's gone wrong, you actually have a duty to tell HMRC. Being proactive is your absolute best defense.
Look, we've gone through a lot, and it's clear that while SEIS is an incredibly powerful scheme, there are a lot of moving parts. Everyone's financial situation is different, so if you're seriously thinking about this and you want to make sure you get it 100% right, our team at My Tax Account is here to help. We can give you that personalized, expert guidance to make your journey a success. You can reach us on WhatsApp or give us a call on 07854 255 375 or just drop us an email at info@mytaxaccountant.co.uk.
So, we end on this final thought. The government has laid out this incredible opportunity for you. A chance not only to get in on the ground floor of the next generation of great British businesses, but to get huge tax benefits for doing it. Really, the question is no longer if you should think about it, but which promising UK startup are you going to back? For more guides just like this one, make sure you subscribe to the My Tax Accountant YouTube channel.